Hey, everybody. Welcome to the morning market briefing. It's Tuesday, August 18th, 2026. Hope you're doing well out there. Tom, Ben, what's up?
Hey, what's up?
Yo. Greetings. Greetings, everybody. Let's jump in. Meta heading to trial, facing charges that their platform encourages compulsive and prolonged use by young people. I just want to go out on a limb. It does.
Well, I don't know if I wouldn't say that it actively encourages. I think it's just designed. That's like saying
Specifically
that,
for that.
Yeah, I mean, it's like Doritos don't encourage you to eat more, but
Yeah.
they certainly are designed to make you want to.
Yeah. It's
I don't know at what point is it effective marketing and then and product, and at what point is it illegal? And I mean, obviously there's another part to this lawsuit, and that's 29 states have accused Meta of collecting data on children under the age of 13, which violates federal Children's Privacy Act. So that's another avenue to this. But in terms of encouraging compulsive or prolonged use, I thought that's the whole point of video games. Like you said, Doritos, like so many things.
Yeah, I mean, this is the
encourages
argument
you
when
to
I was in middle school: is kids were playing PlayStation too long,
watching too much TV.
watching too much TV,
listening to too much corn.
listening, to the devil's music.
I'm curious to see how this shakes out. I mean, it certainly seems like my expectation is that there will be a wide disconnect between the court of public opinion and the actual legal ramifications. I mean, I just think this case is relatively obvious in terms of what is happening and the things I understand why people don't love it. But is it illegal?
I don't think so. I mean, it's a freedom thing.
I'm curious about specifically the Children's Privacy Act, collecting data on people under the age of 13. I'm curious what the defense the Meta is going to put up on that is.
Here's the irony. Here's what I think is actually happening. Is they want to implement the no social media for people under 16, which means that then if you use social media, you have to put in your driver's license and they know exactly who you are and you can no longer do anything on the internet without anonymity. And then they can collect all the data they want on you, both them and the government, on everyone over the age of 16. I mean, that's, and you go to places where they're cracking down on freedom of speech. You can't tweet in the UK anything that's remotely questionable. Others come to your door and arrest you. Why? Because they're making it so you have to put your ID in order to be on the internet. I mean, that's the gameplay here. I think it's actually, you could argue that if you look at the states doing this, New Jersey, California, Colorado, Kentucky, I would say Kentucky's probably the only one that's worried about children. The other three are worried about making sure that you can't have opinions that don't line up with the general vibes of those three states.
The California thing is interesting. Meta says that this could cost them $1.4 trillion dollars. And the prosecution, basically the plaintiffs basically saying, no, it's only going to be $193 billion.
It's weird too, though, that the prosecution's saying that. They're saying like Meta's just trying to make a point, get some sticker shock out there, try to get people feeling some positive sentiment on their side because of the ludicrous amount of $1.4 trillion. I've never seen a guilty person, however, be like, you don't know how guilty I've been. I mean, there's a little bit of like, you guys don't understand how good we were at collecting data on people under the age of 13.
I mean, the argument is they're losing this money due to lack of productivity or lack of education. But California's also done away with entrance exams for their universities. Michigan just did away with grades for freshmen, the University of Michigan, because guess what? Kids get there, and if you don't have to prove that you know how to do math, then you don't know how to do math, and you get to college and you don't do well. I mean, that's the game. They've done this thing where they're like, suddenly we have a bunch of people who have admitted to these prestigious universities, UCLA and USC, and guess what? They don't know how to do basic arithmetic, but that's what the entrance exam is supposed to indicate. So I mean, that's a problem. And they're like, oh, well, it's because they were scrolling social media. It's like, no, because you just failed to have a standard for anything. But you need to put your ID in to use the internet, but not to vote.
Yeah. And I'm curious what purpose this is solving, because you're going to hit one of your companies really hard in your state, which, I mean, especially if you have a wealth tax, you're getting less money from Zuckerberg that way. And $1.4 trillion is a lot of money, even for Meta. I mean,
Yeah.
a lot of money.
As we've learned, it's more than the GDP of almost every country in Europe, except for Germany, France, and Poland, and almost Switzerland.
So $20,000 a person. So theoretically, shouldn't the people be getting $20,000 each? But it won't be. It'll basically just be
Newsom
again
just balance the budget.
Again, it'll be using consumers as and your citizens as a way to generate money to fund the profligacy of the states, because just like Meta's quote unquote exploiting children to make more money, so the state would be also using this rule to
they'll exploit Meta's exploitation to make more money.
And wait for it, just like Europe exploits their rules to bilk money out of our tech companies.
Out of Meta.
It's very European.
Yeah.
It's very European.
And you know how I feel about that. Yuck.
I do want to come back, Tom. You mentioned the entrance exams. I think the people out there should know that on Friday we are having our in-office fantasy football league draft, and the loser has to take the SAT.
And has to score what?
And has to score an 1100
in order to not take it again.
Yep.
Yeah.
This is going to be fun to watch.
I mean, I don't know. Like, I don't even remember exactly what the things you need to know for the SAT are. I feel like
it's been a while.
I feel like I do okay though.
The national average is like 1050.
Yeah.
So we'll see.
I mean, it's not at a 12. It went up and then it went down again because it's 1600 when I was in high school.
Here's the question: do you do better or worse than you did in high school?
I bet I do.
I would do worse.
Worse on the math, certainly. I haven't done much geometry lately.
I think I would do worse on the
or
math.
even algebra. Because guess what? You don't actually need those things, folks.
Yeah. I would definitely do worse. There's no way I would be improving. It's been so long since I've taken a 3-hour standardized test.
Man,
I think I do okay on the verbal, though. I feel like my vocabulary
out of curiosity, when the loser goes, I might just go with them just to see.
It's only $68. I looked it up.
Man,
not bad.
Not bad at all.
Almost the perfect price.
Yeah. I might round up. We got Anthropic revenue data coming in 65 bill in July, up from 47 billion in May. How do we interpret that? Good growth, bad growth?
Yeah, so we talked about this yesterday because we didn't have the July numbers, but now the July numbers leaked as well, and the 65 billion annualized, so about 5.5 billion in the month of July. If you do the math on that, I was thinking June was probably around 5 to a little bit above 5. So I think you're still seeing good growth from Anthropic, but I think people are a little bit concerned, and you're seeing this in the markets this morning.
As you get new data, it's less impressive than yesterday's.
Yeah, because the growth is potentially decelerating. Again, I think that the big thing here for me as it relates to Anthropic is the profitability and the fact that they are profitable, and they do have very good revenue growth. I just think that to get those numbers in quick succession, seeing the massive acceleration in Q2 and then seeing kind of a return to normal growth in July is a little bit jarring for people. I also think that, I mean, we're trading some of the stocks off, like Marvell's down 5% pre-market, Micron's down 5%. I mean, just speaks to the froth in some of these chip stocks. But to trade those guys off 5% on, a leaked revenue number from a company that's not even public yet, that's 1 month, I think is a little bit crazy. I mean, you also throw in July 4th there. I mean, everyone's on holiday, everyone's on summer vacation. So, it makes sense that there will be fewer token usage in July. Let me know when things all come back in September, October, and people start token maxing again. But I mean, it doesn't surprise me that things decelerated a little bit in July. I think the trend is still very much your friend on these stocks.
Yeah, and I think the overlap between people that are token maxing and watching a lot of World Cup in July, probably like it's that Venn diagram's just one circle.
Yeah.
So
wrist braces, a lot of really good at typing.
Iran trying to assert more control over the Strait, which seems like the obvious move. Just a week ago, Trump announced that we own the Strait. So Iran negotiating with Oman. I mean, this thing's just, there's no path here. there's no path.
No, everyone's still
There
doing
never
the
was
same
one.
thing.
There hasn't been one for 1,000 years.
I mean,
I liked your summary paragraph on this bit.
yeah, I mean, I basically say, look, Trump says back channel communication with IRGC remains open. Not a surprise. IRGC says that's a delusion. Not a surprise. Israel is still bombing Lebanon. Houthis are still attacking Iran. Kushner's still trying to negotiate a ceasefire in Gaza. Netanyahu still won't stop fighting Hamas until it fully disarms. Hamas still won't disarm until Israel leaves the Palestine region. I mean, it's just like everything that was the case in March is still the case today.
Yeah.
And I don't see any way. And now we're part of it.
Yeah.
Which is unfortunate.
I will say I'm shocked that this is still going on. Not that there's an obvious solution, but any talk of we want to get this thing wrapped up before the midterms, that's so far out the window.
Yeah, that's
I mean,
gone.
there's no path. Home Depot reported earnings up about 2.5%. Ben,
Good numbers from them. Surprising. I was fearing a little bit more, although they didn't warn on the quarter, which I thought was positive. They don't have their CEO in office right now. He's on medical leave, Ted Decker. So, you had some things going on with Home Depot that I was a little bit more concerned with, but they did beat on my expectations on same-store sales. They were up about 2%, and they expect some acceleration in the back half of the year. They say people are really engaging on small projects. Still not seeing the big growth on any big projects, home remodeling, et cetera. And the reason for that is high interest rates, and you can't really get the financing because it's so expensive. And I don't think that's going to change until rates come down. One thing that I was talking about, and I didn't have this in the notes, and I had some real bad technical problems this morning. But one thing that we were talking about as well yesterday is how financing costs are perpetuating throughout the economy, or propagating throughout the economy, I guess is the better word. And one thing is inventory. So the Empire State Manufacturing Survey came out yesterday morning, and it said that lead times are lengthening and that people are concerned that inventories are too low, and that there is a significant uptick in unfilled orders. And my thought on that is there could be some confounding variables. I think that supply chains maybe have become a little bit more efficient, but that unfilled order number really going up to cycle highs was surprising to me. And I do wonder if it's really providing a incentive for companies to eat hand to mouth. And what I mean by that is don't order inventory until you know that you need it and that you know you can sell it, because one, the macro backdrop is uncertain, but two, inventory costs are high. Like buying inventory, you have to finance that inventory until you can sell it. And so you have an incentive to only hold that inventory for as short a period of time as you can. When rates are zero, you can basically hold that inventory and it just costs you warehouse space. Now it costs you warehouse space and a significant financing cost as well, which can add up to, call it 8, 9, 10% annualized, which is a real cost for a lot of these companies. And so they want to run with leaner inventories, which is going to relate in stock outs, which would also result in price increases. So it's interesting. I do agree in a macro sense that higher interest rates push inflation lower on a very macro sense. But in pockets, I think that interest rates can actually create an inflation problem that they were trying to solve.
Yeah.
If just blindly done.
I mean, we're running into it all. I mean, it's what blew up in Peloton when they started raising rates. Peloton probably over forecasted how many people were going to continue to buy Pelotons. They bought a ton of inventory on floating rate debt. Interest rates went up 5% on them. Suddenly they're, paying 10% on their inventory, but their margins aren't that fat. And then suddenly nobody wants to buy Peloton, and they had to cut prices in order to stay afloat. And the company's never recovered, but they did that kind of pre-inflation. Now, if they've been able to say, hey, a Peloton is, instead of being $400 is now $800, they would have been able to come out of that a little bit more unscathed, but they were just all of the timing was bad on that. And you look around at all these different things. I mean, that was the thing is when interest rates were so low, we ended up overproducing a ton of stuff. I mean, the gold price didn't go up for a really long time because you could just go build a new mine. Corn prices were through the floor. Now we're seeing in a lot of places like coffee and chocolate where the price of production has gotten so high. You're seeing kind of runaway costs on those because like you can't build a new farm. You can't be like, hey, I'm gonna go buy a piece of land. I'm going to finance that. I'm going to finance all the planting and all that stuff because eventually it's going to yield some sort of crop because there's just no point in doing it because the hurdle to make money is so high. And so one bad storm, one bad heat wave, suddenly that creates a scarcity problem. And so that's we got to focus on abundance. How do we get abundance? Getting interest rate down will create abundance. Getting the ability to cut red tape and build stuff, new houses, new apartments,
New chocolate factories.
Higgs doesn't have a problem with that. He's producing overload over here, but
Natural gas.
But I mean, that's what we need to focus on. But right now, we're so restrictive. And probably 100 basis points over across the curve where we need to be. I mean, just in terms of real rates, we're ticking up into levels we've never seen before. Just because no one will say, "Hey, maybe these are too high," because that's something that Trump said. It's just insanity, but that's what's happening. It's derangement syndrome.
It's going to turn. We got Goldman on our side now.
Yeah, Goldman finally.
Shout out to Goldman. We got him.
But we'll see. I mean, I think there's going to be a time where it flips. It has to. But even yesterday, Jim Bullard was like, why don't we just go ahead and raise rates? What's the worst that could happen? It's like, I don't know. We get insanely restrictive and he's like, why would we wait for the economy to crash? It's like, well, if you keep raising rates, it will. That's the whole thing.
I mean, we've seen it time and time again. Every single time the Fed moves on rates, it always like stair steps up the rate. And then they just boil the frog, and then all of a sudden,
go
like
a
it
little too
breaks.
far.
And then it just like drops by 4%. Like we've never actually seen. I think maybe in the mid 90s with Greenspan, maybe just briefly, we saw rates come down slowly over the course of about a year. But beyond that, it's rates go up a quarter, and then get slashed by 500 basis points overnight.
Yeah. I mean, cutting interest rates does not increase inflation. If it did, we would have had inflation all through the 2010s. What it does do is increase the velocity of money, which is what we need right now because the velocity of money is what's keeping people from doing anything. And that's the whole thing with inventory. It's like, how quickly can you get it in and out? Well, you need to increase that velocity, but you can't do it if you can't borrow money for a rate that would get you, money in, money out. And so it's gumming up the system in a way that for some reason everyone is failing to realize. Also, it hurts the if you're worried about the debt spiraling, well, how about we pay less interest on the debt and then we, let's refinance those credit cards to a lower rate.
Makes sense.
Yeah.
Let's fix it. All right. We'll wrap it up there. We'll be back tomorrow. Y'all have a great day.